Good morning. Welcome to Critical Point Podcast. It is May 20th, 8:03 a.m. Central Time, and this is the stock market update. And I'm Rich Posson. All right, we're looking at the weekly S&P 500 futures, currently the June contract, as a proxy for the S&P 500 cash, but also a proxy for the entire stock market. The Nasdaq has been showing greater strength here in the past few weeks, but it's had its moments of being quite weak. But it looks like to me, as of this morning, the Nasdaq's ready to lead the entire market higher again, but we're still following the S&P 500 primarily. Okay, so what we have is, keep in mind, the model is tracking 12 major market participant groups of traders, and that can explain nearly 100% of price fluctuation during a year. And we catalog these as level 1 all the way down into level 12 or something like that, where we can get down into fluctuations by the second, okay? But at any rate, let's look at the level 1, which is the largest trend during a year. It's how we do business, probably on a semi-annual basis. It's also used to track the long-term business cycles as well as to time them. When you're looking for a top or bottom, say for 3-year cycles all the way up to a century maybe, it's going to boil down to the level 1 top or bottom has to occur. All right, any rate, level 1 bottom in March, earliest allowed, earliest forecast by the model, caught it. I was buying by March 25th, so I had some personal trading evidence of following it. At any rate, the level 1 trend appears to be up into the week of June 8th and maybe even into early July. I suspect it's going to peak in June. So the bottom line is, that gives us an indication of how much more time they have to buy, and the point is they may only buy for, say, a little over the next 2 weeks, maybe 3 weeks, the minimum, and it takes buyers to create tops. So when level 1 buyer's done, there's a good chance we're going to have a setback, because this should pull out of the level 1 top into a level 1 bottom due July or August. And since it's the most important type of trend during the year, we have to consider it could be a sizable decline. It may not be, but it could be a sizable decline. We also have to consider it's important enough that's probably going to relate to some bad data, bad news. There could be a fundamental development. It may be nothing more than a little news cycle development. And if we don't get it, we can still have a price decline, because you at least get the technical traders trading because it's overbought. You may even get fundamental traders taking profits over valuation. So my guess is we'll get some kind of setback one way to the other. I don't think we're going to see a disruption. I don't think the market can be that bullish to just keep on going for the next 6 months nonstop. Okay, so at any rate, inside the level 1 trend, or I should say corresponding with it, are the level 2 traders. And level 2 traders also bought from March into April, and then they started betting on the downside, and they were having a difficult time. They were flip-flopping, changing their mind. They finally got very aggressive last week. It was almost like they said, we're going to get this done. We're going to get it done now, okay? And then this week, it's been rejected. I think the level 2 trader is diversified in their thinking behavior, and they're not all on the same page, and I'm one of them. I'm with them, and I have flipped back, even saying, hey, let's give the bulls a chance here. Maybe this level 2 pullback simply is not going to work. The level 2 bottom is going to occur on the way up, okay? So I think the level 2 trader is back, and that's what the model is saying, is the level 2 bottom was probably last week, earlier than forecast allowed, although there were a few minor rule violations, suggesting we can still get a setback into a level 2 bottom, then maybe as late as week of June 15th, okay? But the level 2 bottom is also due this week. We can see, because it's up this week, that doesn't work. You need a pullback. So I'm now saying the level 2 bottom may occur starting next week, okay? But the problem is, I think it may just be no more than a tiny little dip as it just keeps moving higher into that L1 top. I think the level 2 and level 1 are getting on the same page. They want to push this market higher, okay? Now, inside of that's going to be the level 3 trader, who's basically boils down to the business or trading for a month, during a month, okay? And I'll zoom in on that by use of the daily chart here in a moment. Other things I want to watch out for is if you're trying to figure out, well, how good is this level 2, level 1 uptrend? Well, you want to watch out that if it takes out this week's low at 28.50 on the June futures, similar to cash, I think right at the moment you want to add 10 points on it for the cash. At any rate, that would be a concern that, yes, the level 3 trend is down, but that may be all it is. And then it's just going to snap up and go higher. But it might be the start of trying to correct in that level 2 bottom, and that could mean a little more downside action. We won't know if it's truly in a level 2 decline unless it takes out last week's low at 2760.25, okay, and does it during this time frame, in other words, out to June 15th, then we could say, okay, that's our true level 2 downtrend, but the problem is it could then be a trap, okay, for bears. That is just going to turn up anyways and go higher. But those are some of the risk points to watch if you're bullish. This week's low, last week's low, and any low further back. Now, technically, what the traders are watching is this is a weekly stochastic, and it doesn't mean majority of traders are following this one, but they might have something similar. And what it's suggesting was weekly stochastic has been overbought, did turn into a sell signal over the course of 2 weeks and was most correct as of last week, and now it's already wrong, and if they want to close it at these levels or higher, it's going to trigger a buy signal. Now, it's still overbought, but less so. My thoughts, it's going to stay overbought for a while yet, maybe get more overbought as it works in that level 1 top, okay? But I think it is a warning that upside might be rather limited here, even if the trend is up for another 4 weeks or something like that, okay? So there, I've given you some risk points to watch where we may be in trouble that we have a level 2 downtrend, and we may not know just how low it can go. It could still be quite volatile and quite bearish, but I have my doubts at the moment. All right, now let's go ahead and zoom in on the daily chart here. And this is where we can also talk about some upside objectives. Okay, so what we have here, we zoomed in, and so here's our L1 trend, and this bottom line is our support line that we're using for the moment. And this is actually suggesting it might top out right at the 1st of June instead of that week of June 8th, but let's just be cautious of that. We just realize it can top out a little earlier than we thought. So our support is moving up, and you can basically just use prior daily lows here to be in line with that support line. Now we're going ahead and calling level 2 bottom in place, even though it's awfully early. We can be wrong on that, but the point is it may not come back to last week's low. Therefore, who cares if it's a level 2? It could be just a level 3. So again, we're just going to play it safe here and say level 2 trend is up. So that's this line here, and that's not a support line right now. It's just a directional line saying level 2 trend is up. Level 2 buyer is now in with the level 1. You know, they level 2 turned against level 1. Now they're back in line with level 2. So more buying. All right. Inside of this is a level 3. They bought, sold, and so forth. And it looks like they're buying, and we believe the level 3 trend is up into tomorrow, which is the earliest to top, but that's awfully short. There's a bit of a minor rule violation there. I think this thing should actually stay up into next week. So put me down that the market's going to rally 1 to 5 days, maybe even as much as 7 days yet, or at least there's going to be buying to support it, meaning I suppose it could turn sideways on us, but it looks like it can move higher. Now, here's what the technicians are watching, as well as some of the fundamentalists. 200-day average. It bumped its head near the 200-day average here, sold off. Came up near that high, and they got a little scared it just isn't going to work. Sold it off harder last week, saying this thing cannot break through the 200-day average. They become nervous, and then they bought again. Now, obviously, there was some other news going on here. Drug news versus virus news versus the opening of the economy, things like that. But on balance, we at least had the technical traders saying this thing isn't doing well trying to break through the 200-day average. Well, it looks like yesterday with that surge off the Moderna drug news, and then we got some negative or doubtful news about that Moderna drug news yesterday, but it looks like they weren't willing to sell it. And now look at today. It's already back up. If it takes out yesterday's high, we're going to get an objective maybe as high as 31.29 showing here on the chart. I think it's actually 31.28. So that means there could be a sizable up move coming as they break through the 200-day average. They get very excited. But the problem is the daily stochastic is already overbought, and it has done well of tracking with these level 3 trends. So it is warning setbacks coming for level 3 someday, okay? And so maybe it can top tomorrow or by the end of the week, okay? But I wonder, can it stay up into early next week is what I prefer. Maybe this overbought's a sign that it can't achieve that objective. We're just going to poke through the 200-day average and just not find enough buying. Don't know, but until today's low is violated, I think this level 3 is working, and I think there's higher to come, and I think they're going to break through the 200-day average, which right at the moment on the futures, that average is at 29.96, okay? Now, we also have the 5-day average that the funds have been buying near that, or at least the technicians. And the 5-day average is rolled up, kind of confirming the L3 trend is up. And last night they sold it down to the average and then bought it. So it's working. All right. So I want to give this a chance to move higher into tomorrow. And I think what we want to think of as our narrative at the moment is that the economy is opening up. And that seems to be more important than the virus cases and the virus deaths and some of the resurgence and complications and problems. They're just thinking people are going to go back to spending and they're buying. And then over in the NASDAQ, we have companies that have made money all during this disaster. Okay. So I just think that's the overall bias is they can't help it. They just got to be bullish until proven wrong. And apparently there's not enough bearish money to stop them yet. Okay. Now I'm going to zoom in here. This is actually, I've been calling this a 5-hour chart, and it's actually 6-hour. And I just wanted to show you, these were projections for a level 4 top, didn't work. Now these are interweek traders, okay? And transactional flow of those working those larger level 2, level 3, level 1 trends. There was supposed to be a level 4 bottom, didn't work, okay? Except an explosion. When you find that it's due for a bottom and it's just kind of chugging along or it's doing nothing, when it bombs, you then can get an explosion. We got it. That was the evidence of a level 4 bottom, but we didn't have any evidence of a level 4 top. Now, the market was supposed to rally overnight, and it did, and maybe it's going to top now for a level 4, pull back for a level 4 bottom, then higher in tomorrow or even the next day. But the model is kind of warning, you know what? This projections for these times are not really working that good. I think we just got to look in hindsight and resynchronize. So the model's already this morning, so you know what? It bottomed actually yesterday or in the early part of the overnight market, and the level 4 trend is already up. So I'm suggesting it's not really going to pull back. It can. If it pulls back, it's probably going to be brief, not a huge thing, and it's going to be up tomorrow anyways. But there's a good chance they're already in a mood to just keep buying today on into tomorrow. Hope this has been some assistance to you. You can set up your own intraday charts here and just look for lows that could signal there's something wrong. They're going to pull it back for a more appropriate, proper L4 bottom. But also just keep in mind, no, it looks like at least the level 3, level 2, and level 1 trader is ready to buy. I'm saying the level 4 trader is ready to buy today. I don't see the negative news out there to stop them. Not so sure we have enough fresh bullish news to explain why we should be this high during a disastrous economy. But the bulls are winning. Let's not forget that. Manage your risk relative to analysis of others. Have a great day. Thank you.